Welcome back. If you're trying to stay sharp on the big shifts happening, but, well, time isn't exactly on your side, you're in the right place.
Definitely.
Today, we're going to dive deep into a pretty interesting prediction. It's from the Motley Fool.
Oh, yeah.
Yeah, an article they put out, I think it was April 19th, 2025, and they asked this big question. Could meta platforms, Facebook, Instagram, WhatsApp, could they actually end up being worth more than Alphabet?
Wow. Alphabet, Google's parent company.
Exactly. Could Meta leapfrog them in market cap, say, within the next 10 years by 2035?
Okay, that is bold. So we've got that Motley Fool article as our starting point.
Right.
And our job here really isn't just to read it out. It's to dig into the arguments, right? Why do they think this could even happen?
What's the logic?
Yeah. What are the real challenges, the opportunities for both companies? We need to kind of scrutinize if this future scenario they paint is, actually plausible.
Okay, good plan. Let's kick off with Alphabet then. They're the incumbent, the king of the hill right now. And the article, it acknowledges their history. It's impressive. Between 2014 and 2024, revenue grew, like 18% per year on average?
Yeah, and EPS, earnings per share, that jumped 23% annually.
Huge numbers. And the stock, up over 480% in that decade. Investors have done very well.
Absolutely, a phenomenal run. But here's the twist the article brings up. The expectations are changing.
Okay.
Analysts are forecasting a slowdown. For the next few years, say 2024 to 2027, they're seeing maybe 11% revenue growth, 13% for earnings per share.
Still growing, obviously, but definitely a slower pace than before.
Oh, exactly. A noticeable deceleration.
And this is where the article gets really interesting, I think. It's not just about slightly slower growth. They talk about potential existential challenges.
Ooh, strong words.
Right. First up, competition in search. That's Google's bread and butter.
The core business.
And these generative AI platforms like OpenAI's ChatGPT, they're mentioned as a real threat. How are they different from, Bing or DuckDuckGo?
That's the key question, isn't it? It's not just another search engine listing links.
Mm-hmm.
Generative AI, well, it tries to answer your question directly.
Ah, okay.
It synthesizes information, gives you a response. You might not even need to click through a list of websites. That potentially bypasses Google's whole model.
Right, the search results page with all the ads.
Exactly. So how does Google integrate that kind of AI without, eating its own lunch? It's a tricky spot.
Yeah, I can see that. And it's not just search, is it? YouTube's facing heat, too.
Mm-hmm. Big time.
TikTok is huge, obviously, and Meta's own Reels feature seems to be everywhere now. It feels like a battle for every minute of our attention.
It really is. The video landscape is just so fragmented now. TikTok's algorithm is, incredibly sticky.
Yeah.
And Meta pushing Reels so hard. It puts pressure on YouTube's dominance and, crucially, its ad revenue growth in video. You wonder if YouTube's growth might start looking more like, say, old-school TV viewership trends.
Interesting comparison. And the article mentions even more pressure points. Apparently, independent ad tech platforms like The Trade Desk are chipping away at Google's ad revenue.
Yeah, that's another angle. Advertisers are getting more options, more sophisticated tools outside Google's walled garden.
What?
These platforms offer maybe more control, different data insights. It suggests the power balance in digital ads could be shifting bit by bit. Alphabet can't just ignore that.
And then there's stuff Alphabet isn't really strong in, like social media itself, e-commerce, this whole social shopping thing.
Right, where people buy stuff directly on platforms like Instagram.
Yeah, it feels like a lot of consumer activity, a lot of money is moving there, and Google isn't really a major player.
And those are huge growth areas. When you think about Meta, they know so much about what users like, what they talk about. That gives them a natural edge in social commerce.
Makes sense.
Google's strength is more in search intent, someone actively looking for something, cracking that spontaneous, socially driven purchase. That's harder for them. They've tried, but haven't really made huge inroads.
Okay, and one more, the cloud market. Google Cloud is growing, but it's still number 3, right?
Yeah.
Behind Amazon's AWS and Microsoft Azure.
Still a distant third, yeah. And that market is incredibly competitive, needs massive, massive investment to gain ground.
So a tough climb there, too.
Definitely. They have the tech know-how, obviously, but AWS and Azure had such big head starts. Catching up is a major challenge.
And almost like the cherry on top, or maybe the storm cloud, there's the regulatory pressure. The article mentions the DOJ, the Department of Justice, pushing for big changes, like maybe forcing Google to sell off the Chrome browser.
Sell Chrome.
Wow.
And potentially restricting how Google promotes its own stuff on Android phones. Those sound like, game changer.
They absolutely could be. Chrome isn't just a browser, it's how millions access the web. It's a huge data source for Google. Losing that, that's major. And limits on Android could hit everything from search to the Play Store.
Right. So you add all this up, the competition, regulatory heat. You can see why the article suggests that slower growth path, maybe even hinting at becoming like a slower growth tech company. They mention IBM.
Yeah, the next IBM. That's quite a statement.
It is. Definitely a sobering thought for Alphabet.
Okay, so that's the picture for Alphabet according to the article. Now let's flip it. Let's talk about Meta.
Right, the challenger in this scenario.
The article really emphasizes their sheer scale in social networking. End of 2024, what was it? 3.35 billion people using their apps every day.
Billion, yeah. Daily active users. That was up 5% year over year. Yeah. Something like 40% of the entire world population.
Mind-boggling scale.
It is.
Yeah.
And that scale gives them incredible network effects, massive amounts of data. And interestingly, if you look back, Meta's growth historically has actually beaten Alphabet's.
Oh, really?
Yeah, 2014 to 2024 again.
Yeah.
Meta's revenue grew, on average, 29% a year. Alphabet was 18%. Meta's earnings per share grew 36% a year. Alphabet was 23%.
So significantly faster growth over that same decade.
Much faster.
And the article attributes that to, well, their dominance in social, adapting to how we interact online, and that super effective targeted advertising using all the data.
Plus those acquisitions.
Yeah.
Can't forget Instagram back in 2012, WhatsApp in 2014.
Yeah, looking back, those seem like genius moves now. Huge parts of their ecosystem.
Totally. They weren't just buying users. They were buying different ways people connect and share. Made their whole platform much stronger.
So what about the future forecast for Meta? Is it expected to slow down, too?
Yeah, analysts expect growth to moderate, actually becoming pretty similar to Alphabet's projections for the next few years. Around 13% revenue growth, maybe 11% EPS growth from 2024 to 2027.
Okay, so similar growth rates predicted.
But, and this is the key point the article makes, they argue Meta is facing fewer sort of major headwinds right now compared to all those challenges we just listed for Alphabet.
Fewer existential threats, maybe?
Perhaps. They seem to have clearer strategies laid out to tackle their own issues and find new growth.
Like what specifically?
Well, Reels, obviously.
Yeah.
That's their direct shot at TikTok. They're pouring resources into AI to make their ad targeting even better, keep that revenue engine humming.
Right.
And they're really pushing to get small businesses selling directly on Instagram, that whole social commerce play.
Turning Instagram into a shop, essentially.
Kind of, yeah. Plus, there's the whole Metaverse thing, their Reality Labs division.
Ah, yes, the big VRR bet.
Exactly. It's definitely early days, and it's costing them a lot of money right now without huge returns.
The big gamble.
A very big gamble. But the article suggests if that does take off eventually, Meta has a serious early mover advantage. It's a potential future growth engine that Alphabet doesn't really have a direct equivalent for.
Okay. So, different sets of challenges and opportunities. Now, the article got into some actual numbers, some hypothetical valuations for 2035. How did those look?
Right, and we need to stress the hypothetical part here. These depend heavily on assumptions.
Always do.
Okay, scenario one. Both companies hit analyst forecasts through 2027, then both grow earnings per share at 10% a year until 2035. And assume both trade at a 20 times price-to-earnings ratio, a common valuation metric.
Got it. Standard assumptions.
Under that scenario, Meta's market cap in 2035 is estimated around $3.63 trillion. Alphabet's considerably higher at $6.2 trillion.
So in that future, Alphabet is still much bigger.
Correct. Alphabet maintains a clear lead if growth is sort of steady and similar for both.
But there was another scenario, wasn't there? A more divergent one.
Yes, scenario two. This is where things get spicier and where the potential for Meta overtaking Alphabet emerges.
Okay, lay it on me.
This scenario assumes Alphabet's challenges really bite. Its EPS growth slows way down after 2027, maybe just 5% per year. And investors become less confident, so its stock only trades at 15 times earnings by 2035.
Lower growth, lower valuation multiple.
Right. In that case, Alphabet's market cap might only be around $3.22 trillion.
Okay, much lower than the first scenario. And what about Meta in this second version?
Here, Meta is assumed to do better. Faster EPS growth after 2027, say 15% per year, and investors are more optimistic, giving it a higher PE ratio, maybe 25 times earnings.
Higher growth, higher multiple. Makes sense.
Under those assumptions, Meta's market cap could potentially hit $6.47 trillion.
Wow, okay, so in that specific speculative future, Meta actually becomes the more valuable company.
Exactly. It illustrates how it could happen if Alphabet falters and Meta executes really well on its growth plans, including maybe the metaverse paying off.
But again, big ifs there. These are just models.
Huge ifs. Tiny changes in those growth rates or PE assumptions completely change the outcome. They're thought experiments, really, not predictions set in stone.
Understood. So let's try and boil this down. What are the main takeaways from this Motley Fool analysis? It sounds like they're saying Meta just has more potential growth paths open right now.
Yeah, the phrase they used was more irons in the fire. That seems to be the core argument.
Well, Alphabet maybe has become a bit complacent. Is that fair?
The article hints at that, yeah, suggesting maybe they haven't been aggressive enough in finding the next big thing beyond search and ads.
Which is a classic innovator's dilemma kind of argument, right? Success makes it hard to disrupt yourself.
Precisely. Though, to be fair, Alphabet is investing heavily in AI and other areas.
Yeah.
It just might not be obvious on the bottom line yet.
Good point. And the article itself ends on a cautious note, doesn't it? Saying it's impossible to know for sure.
Absolutely. They explicitly say calling Alphabet the next IBM might be premature, which seems wise.
Yeah, predicting tech 10 years out is tricky.
Understatement of the year.
Yeah.
So much can change. Unexpected disruptions, new technologies. Who knows?
Okay, so wrapping this up, the Motley Fool article makes a provocative case. Meta could overtake Alphabet by 2035.
Right. The argument leans on Alphabet facing serious headwinds competition, regulation potentially slowing it down.
While Meta is seen as having maybe more diverse growth shots, Reels, social commerce, the Metaverse bet, and maybe fewer immediate crises.
But, as we've said multiple times, this is all built on assumptions about a very uncertain future.
Definitely. Which brings us to the final thought for everyone listening.
Yeah, considering all these moving parts, AI disrupting search, the video wars, VRR potentially emerging, ads changing, regulators watching, what factors do you think will actually matter most for these companies over the next decade?
What's the critical element that determines who comes out on top? Or maybe what haven't we even considered? What other disruptions or opportunities might completely change the game?
It's fascinating to think about. Keep watching the trends in AI, social media, the cloud, regulation. See how things evolve.
Form your own opinions. It'll be really interesting to look back in 2035 and see how this prediction actually played out. Thanks for joining us for this down dive.